Welcome back, folks, to the show. I'm Devin Walton here with Homestead Road, and today we're tackling a concept that's creating a major buzz in the housing market, the 50-year mortgage. 50 years, wow. Think about that. That's a long time. We're used to the gold standard of a 30-year fixed-rate mortgage, but as housing affordability continues to be a struggle, particularly for first-time buyers, this super extended term is being floated as a potential solution. Is it a lifeline or is it a long-term trap? That's what we need to break down in the next 10 to 15 minutes. So we're going to give you 4 solid pros, 4 serious cons of locking yourself into a half century of home loan debt. So the pros of a 50-year mortgage: number 1, significantly lower monthly payments. The most immediate and obvious benefit is the reduction in your monthly payment. So by stretching the principal repayment over 20 extra years, you substantially lower the required minimum payment. Example, so on a $400,000 loan at 6% interest, moving a 30-year to 50-year term could save you a few $100s every single month. For many buyers priced out of the market today, those monthly savings are what allows them to qualify for a loan and finally achieve home ownership. Increased buying power with a lower monthly payment: lenders may be willing to qualify you for a slightly larger loan amount while keeping your debt-to-income ratio in check. This means you can potentially afford a higher-priced home in a competitive or high-cost market. For some, this isn't about buying a bigger house, it's about being able to afford any house in a desirable neighborhood or good school district. Short-term financial flexibility is a third benefit of the 50-year mortgage. So if a 50-year mortgage is a fixed rate, it offers incredible predictability and flexibility in your monthly budget. You have lower locked-in housing costs, which frees up more of your cash flow for other essential needs, like in our other conversations recently, daycare expenses, investing, or saving for emergencies. It acts as a financial safety net against high interest rate environments. And our fourth pro is really the opportunity to prepay, the best of both worlds strategy. So if you use the 50-year term to qualify for the home, you're generally not locked into a half century of payments. Most mortgages allow you to prepay the principal without any penalty. This means that you could enjoy the lower required payment, but choose to pay extra each month, or 1 extra payment a year, effectively paying the loan off on a 30-year term or even a 15-year schedule if your cash flow allows. It gives you the option to accelerate equity with the safety of a lower minimum payment should times get tough or times get tight. So now let's talk about the cons of a 50-year mortgage. First is the massive increase in total interest paid. This is a big one. The deal breaker for most financial experts, of course. Spreading the loan out gives you repaying interest for 20 more years. On that same $400,000 loan at 6%, a 50-year mortgage can result in you paying more than double the amount of total interest compared to a 30-year mortgage. We're talking hundreds of thousands of dollars extra, which massive drain on your long-term wealth. 2 is extremely slow equity accumulation. Because of your early payments being stretched so thin, almost all of your money is going toward interest only, not any principal payments. So after 10 years of a 50-year mortgage, you might have only paid off about 4% of your loan's principal. Compare that to a 30-year mortgage where you could have maybe retired over 15% of the same time frame debt. Our number 3 con: debt extending into retirement. With the median age of a first-time home buyer hovering around 40, adding a 50-year mortgage means you could still be making payments well into your 80s or 90s. This creates a serious financial risk for your retirement years. You're trading short-term monthly savings for the potential burden of carrying significant debt when you should be enjoying your non-working years. The fourth con is the risk of housing price inflation. So if a 50-year mortgage becomes widely available, it effectively increases the buying power of millions of people without increasing the supply of available homes. More qualified buyers chasing the same number of houses will likely push prices up even more, canceling out the affordability benefit for future buyers that it was intended to do. So my final thoughts here: the 50-year mortgage is a fascinating concept driven by a very real crisis in housing affordability. The short-term benefits are overshadowed by the massive long-term costs. For most people, it feels like building equity and more like a 50-year lease. If you consider this option, you must have a disciplined plan to prepay aggressively. As always, consult with a trusted mortgage professional and financial advisor before making any decision. And remember, whether you're refinancing or looking to sell a home that no longer fits your needs, Homestead Road offers a simple, stress-free way to sell your home. Sell it to us as is for cash. I'm Devin Walton, Homestead Road. Knowledge is leverage.